The U.S. firearms industry has faced significant financial distress in 2025, with companies like SCCY Firearms in Daytona Beach, Florida, shutting down and Watchtower Firearms filing for bankruptcy. These aren't just isolated cases. They point to bigger issues hitting the industry hard: slumping sales, economic pressures, expensive lawsuits, operational hiccups, and a political shift that's cooled the rush to buy guns. A major culprit? New tariffs from the Trump administration, which have jacked up costs for manufacturers relying on imported steel and aluminum. Take SCCY Firearms, for example. They made a name for themselves with their budget-friendly CPX pistols, priced at just $269, perfect for first-time buyers looking for reliable protection without a big price tag. By 2016, SCCY was a top 10 pistol producer in the U.S., cranking out thousands of American-made firearms each year. Despite its initial success, signs of trouble began to surface in the early 2020s. In 2017, SCCY announced plans to relocate operations to Maryville, Tennessee, with a proposed investment of $22.5 million in a new facility. However, these plans were ultimately canceled, and the company continued operations in Daytona Beach. By early 2024, reports emerged of layoffs and halted factory operations, indicating financial strain. But in 2025, the company's factory fell silent. Its assets were auctioned off, and its legacy was reduced to a cautionary tale. What went wrong? The answer is a brutal mix of financial woes, legal battles, and operational missteps, all made worse by new economic policies. SCCY was hit with a staggering $249,000 in unpaid taxes, a burden that loomed large over its Daytona Beach facility. By March 2025, the Volusia County Tax Office had slapped pending levy and seizure notices on the factory, effectively choking off any hope of recovery. Add to that a series of lawsuits from cities like Rochester and Buffalo, New York, which accused SCCY of fueling gun violence through its affordable firearms. These legal fights drained millions in legal fees, costs that SCCY's insurer refused to cover, leaving the company to foot the bill alone. By mid-2024, SCCY's factory had ground to a halt, with layoffs piling up and customer complaints mounting over unreturned guns sent for repairs. By June 2025, everything from CNC machines to office furniture was on the auction block, marking the end of SCCY's 20-year run. But there's a bigger story here, one that points to a seismic shift in the firearms industry. At the heart of SCCY's collapse and the struggles of other manufacturers is a single word: tariffs. Let's dive deep into the tariff tsunami and how trade policies are sinking manufacturers. When President Donald Trump returned to office in 2025, he wasted no time flexing his economic muscle. On February 10, 2025, he signed executive orders slapping a 25% tariff on all steel and aluminum imports, materials that form the backbone of firearm production. Barrels, slides, frames, and springs all rely on these metals, and for companies like SCCY, which prided itself on American-made products, the sudden spike in cost was a gut punch. The U.S. imports roughly 50% of its aluminum and a significant chunk of its steel from countries like Canada, Mexico, and China. With tariffs jacking up prices, manufacturers faced a grim choice: absorb the losses and bleed cash, or raise prices and risk alienating customers in a market already cooling off. For SCCY, this was a death knell. The company's business model was built on offering pistols at rock-bottom prices, appealing to budget-conscious buyers who couldn't afford high-end brands like Glock or Sig Sauer. But with steel and aluminum costs soaring by 15 to 25%, SCCY couldn't maintain its $269 price point without slashing profits. Passing those costs on to consumers wasn't an option either. Sales were already slipping as the market softened. The National Shooting Sports Foundation, the industry's leading trade group, warned that these tariffs could stunt economic growth and make shooting an unaffordable hobby for many Americans. For a company like SCCY, already teetering on the edge, the tariffs were the final push into insolvency. And SCCY isn't alone. The tariffs have sent shockwaves through the entire industry, raising production costs across the board. Manufacturers that rely on imported components, think springs from China or steel from Canada, are now scrambling to keep their prices competitive. Some have tried to switch to domestic suppliers, but the U.S. simply doesn't have the capacity to meet demand at the same low costs. The result? production delays, higher prices, and frustrated consumers. For an industry that contributed $90 billion to the U.S. economy in 2024, according to the NSSF, this is a crisis that could have far-reaching consequences. To understand why tariffs are hitting so hard, you have to look at the bigger picture. The firearms market is shrinking. After a frenzy of gun buying during the pandemic, sales are returning to pre-crisis levels. The FBI's National Instant Criminal Background Check System, NICS, a key indicator of firearm purchases, is projected to drop by 5% in 2025 compared to 2024, which itself saw a 3.5% decline through October. Retail firearm sales are down 13% year-to-date through October 2024, and ammunition sales have dipped by 5%. Meanwhile, retail firearms inventory has shrunk by 8%, though it's still higher than pre-pandemic levels, and ammunition inventory is up 9%, hinting at an oversupply that could further depress prices. Why the slowdown? For one, inflation is squeezing consumers' wallets, making big-ticket purchases like firearms less appealing. The tariff-driven price hikes only make things worse, pushing the cost of a basic handgun or rifle out of reach for many. Then there's the political climate. Under a Republican administration, fears of strict gun control have faded, reducing the panic buying that often spikes sales during Democratic presidencies. Without a major event like a mass shooting or new legislation to drive demand, the industry's left grappling with a surplus of guns and not enough buyers. But it's not all doom and gloom. Some consumers are still buying, driven by a deep-seated need for protection. Surveys show that 80% of recent gun buyers cite personal safety as their top reason, with women, Black, and Hispanic buyers leading the charge. This growing demographic is a potential lifeline for the industry, but only if manufacturers can figure out how to navigate the current economic storm. SCCY's collapse is a symptom of a broader malaise. Take Watchtower Firearms, a Texas-based company that burst onto the scene in 2022 with high-end rifles and a flashy marketing campaign. Known for its $4,199 Apache double-stack 9mm pistol, Watchtower aimed for the luxury market, partnering with social media influencers to build hype. But by March 2025, the company was filing for Chapter 11 bankruptcy, weighed down by unpaid federal excise taxes, high debt, and a legal dispute with its former landlord. Critics on platforms like Reddit called Watchtower's approach all sizzle, no steak, pointing out that its high-priced guns struggled to find buyers in a market increasingly sensitive to cost. Other companies are feeling the pinch too. A national firearms ammunition manufacturer and dealer filed for Chapter 11 bankruptcy protection in 2025, hoping to reorganize and stay afloat. Industry-wide, the combination of declining sales, rising costs, and legal challenges is creating a perfect storm. Lawsuits like the one that hit SCCY are becoming more common, with cities and advocacy groups targeting manufacturers for their role in gun violence. These legal battles aren't just about money, they're a public relations nightmare, tarnishing brands and scaring off investors. Let's zoom in on those tariffs again because they're a game changer. The 25% tariffs on steel and aluminum aren't just a problem for manufacturers, they're reshaping the entire supply chain. The U.S. relies heavily on imported metals, with Canada supplying 24% of its steel and Mexico providing 15%. China, while a smaller player at 2%, is critical for certain components like springs. When tariffs hit, the cost of these materials shot up, and domestic suppliers couldn't fill the gap without charging a premium. For manufacturers, this meant higher production costs, longer lead times, and slimmer margins. The NSSF has been vocal about the fallout, warning that tariffs could make firearms and ammunition unaffordable for many Americans, particularly lower-income buyers who rely on guns for self-defense. This isn't just an economic issue, it's a question of access. If shooting becomes a luxury hobby, as the NSSF fears, it could erode the Second Amendment rights of everyday people. Even companies that don't rely heavily on imports are feeling the pinch as the tariffs drive up domestic prices through supply chain ripple effects. On the ground, reactions among gun owners have been mixed. Many lifelong enthusiasts of budget American carry guns expressed genuine sadness and even a bit of anger. On internet forums dedicated to firearms, diehard SCCY fans and concealed carriers mourned the loss of a made-in-the-USA pistol that had served them for years. As one shooting industry reviewer put it, SCCY guns always had a very loyal fan base. Conversely, others in the shooting community have taken a harsher line. A few instructors and critics have seized on SCCY's fate as evidence of the adage, you get what you pay for. For the broader firearms economy, SCCY's collapse is a cautionary tale. In the short term, dozens of Florida manufacturing jobs have vanished. Sources say SCCY's Daytona complex was supporting roughly 150 to 200 workers before its closure. The local supply chain and small retailers who counted on SCCY deliveries will feel the gap too. Those dealers who stocked SCCY handguns now have dead inventory. As a local report bluntly put it, anyone holding SCCY product is on their own because there's no official support or spare parts coming. In a figurative sense, this empties out one corner of the concealed carry market. Enthusiasts who once recommended SCCY as the budget American alternative to imports now wonder where new buyers will turn. The impact extends to ammunition and accessory makers as well. With SCCY gone, consumers will look to other brands, possibly spiking demand for used SCCY parts on the secondary market or benefiting competing pistol lines from Ruger, Springfield Armory, Taurus, and others that are still holding production. Some industry analysts suspect that mid-priced foreign-made pistols could capture SCCY's old customer base. Meanwhile, distributors of gun parts and ammo remain cautious. One firearms economy report noted that retailers are holding higher inventories and expecting possible price pressures even as sales volumes shrink. In the end, SCCY's fall is a symptom of the 2025 gun market's new reality. After a boom, the bust has arrived and every maker is being tested. Some survivors, like Ruger and Smith & Wesson, have diversified into optics and sports shooting, which may help them weather the storm. But smaller firms, especially those that built entire businesses on high-volume, low-margin carry pistols, face hard choices. As one analyst quipped, it's a Darwinian moment. Only those companies nimble enough to adapt or with enough capital to outlast the downturn will come out ahead. For the men who carried SCCY's American-made pistols, the memories will linger. In many self-defense classes and daily routines across the country, a little SCCY pistol was at the hip, promising protection without breaking the bank. What do you think is behind this collapse? Is it bad leadership, political pressure, or just a market correction after years of growth? Let us know in the comments. We read every one. If you found this video informative, hit that like button, subscribe to Survival Gear for more deep dives into the world of firearms and self-reliance, and share this with others who need to know what's happening behind the scenes. This was the story of SCCY Firearms, a company that rose fast but fell even faster. The question now is, who's next?